Video title: SpaceX's $180 billion question. Is it the world's most valuable private company? The hook and the mystery. Narrator: SpaceX. The name is synonymous with reusable rockets, Martian ambitions, and its charismatic, controversial founder, Elon Musk. We watch its spectacular launches, but as a company, it operates in the shadows of the private markets. Unlike Tesla, you can't buy a piece of it on the stock exchange. Yet, its valuation has soared from a startup dream to a staggering $180 billion at its latest employee stock sale. That makes it more valuable than almost every publicly traded company on Earth. But here's the multi-billion-dollar question: how do you even value a company like SpaceX? It's not just a rocket company. It's a constellation builder, a satellite internet provider, and a bet on interplanetary travel. Today, in 20 minutes, we're going to deconstruct SpaceX's astronomical valuation. We'll look at the pillars holding it up, the skeptics, arguments, and what the future could hold for investors dreaming of the final frontier. Pillar 1. The near-term cash engine, Starlink. Narrator: the first and most concrete pillar of SpaceX's value is Starlink. This isn't science fiction, it's a rapidly scaling, revenue-generating business. Think of it this way: SpaceX spent over a decade perfecting cheap, reliable launch with Falcon 9. That was the infrastructure play. Now, they're using that infrastructure to deploy and maintain a mega constellation of over 5,000 satellites, providing high-speed, low-latency internet globally. The numbers are compelling. Over 2.3 million active customers and growing fast. Projected 2024 revenue of $6 to $8 billion, potentially doubling in the next few years. Profitability: SpaceX has stated the Starlink business unit is now cash flow positive. But the potential is even bigger. We're talking about serving rural and remote communities underserved by terrestrial broadband, the global mobility market, airlines, cruise ships, and soon, cars. Governments and the military, a huge and high-margin client. Analysts often use a sum of the parts valuation. If you spun out Starlink alone as a public company, in today's market, it could easily be valued at $80 to $100 billion based on its growth profile and total addressable market. This one business unit justifies a massive chunk of SpaceX's current valuation. Pillar 2. The monopoly in the sky, launch dominance. Narrator: Pillar 2 is SpaceX's foundational and utterly dominant business, launch services. Before SpaceX, launching anything to space was prohibitively expensive, controlled by a handful of government-backed entities in a costly industry. SpaceX turned the economics upside down with reusability. The Falcon 9 rocket's first stage doesn't crash into the ocean, it lands back on a drone ship, to be refueled and flown again. The result? Approximately 80 to 90% market share for commercial launches in the US. A 50–70% reduction in the cost per kilogram to orbit compared to competitors. Reliability and frequency: they launch more than anyone else, sometimes weekly. This creates a powerful, self-reinforcing moat. High launch rate drives down costs, which attracts more customers, which funds more R&D. Competitors like ULA, Arianespace, and new entrants are years behind in reusability. This business is the reliable, contracted cash flow. SpaceX launches NASA astronauts to the ISS, Pentagon spy satellites, and its own Starlinks. It's a multi-billion-dollar per year business with immense barriers to entry. Valued as a standalone aerospace defense contractor with this level of dominance, it could be worth $30 to $50 billion. Pillar 3. The option value, Starship and the multi-planetary future. Narrator: now we arrive at the most speculative, yet most exciting part of the valuation, the option value on the future, embodied by Starship. Starship isn't just a bigger rocket. If it achieves even a fraction of its goals, it will be a paradigm shift on the scale of the first reusable Falcon 9. Cost goal: Musk talks about a $10 million launch cost for 100+ tons to orbit. That's orders of magnitude cheaper than today. The Moon, NASA's chosen lander for the Artemis program, a contract worth nearly $3 billion. Mars, the core long-term vision. This is the multi-planetary species bet. But the potential markets are mind-boggling. 1. Space infrastructure. Making large-scale space stations, lunar bases, and space manufacturing economically feasible. 2. Point-to-point Earth travel. Tokyo to New York in 45 minutes. If regulatory and technical hurdles are solved, this is a $1 trillion travel market. 3. Enabling new industries. With ultra-cheap launch, industries we can't yet imagine become possible. This is the option. Investors aren't just buying Starlink profits, they're buying a lottery ticket on SpaceX defining the next era of space. This part of the valuation is pure belief in technological disruption. It adds a $50 plus billion premium that traditional analysts struggle to model. The bull versus bear debate. Narrator. So, is $180 billion justified? Let's hear the arguments. The bull case. Execution. SpaceX has a history of achieving the impossible, landing rockets, crewed flight. Total addressable market TAM, they're attacking communications trillions, launch tens of billions, and creating new markets. Integration. No other company builds the highway and the trucks and the delivery service. That vertical integration is a huge advantage. The bear case. Capital intensity. The space business eats cash. Starship development is wildly expensive. Competition. Amazon's Project Kuiper is coming. China has its own ambitions. Regulation and space debris are growing concerns. The Musk factor. The company is deeply tied to one visionary but volatile leader. Profitability questions. While Starlink is profitable, the core company reinvests everything. When will it generate consistent, bottom-line net profit for shareholders? Illiquidity. It's a private stock. You can't easily sell, and the valuation is set by occasional secondary sales, not a daily market. Conclusion and the final frontier. Narrator. So, where does this leave us? SpaceX's valuation isn't based on next quarter's earnings. It's a narrative valuation, built on three interconnected stories. 1. The profitable utility, Starlink funding the present. 2. The dominant infrastructure, launch enabling the utility. 3. The world-changing bet, Starship defining the future. The $180 billion price tag says the market believes all three stories will come true. It values SpaceX not just as an aerospace company, but as a hybrid of Boeing, Comcast, and the equivalent of the early internet pioneers, all rolled into one. The ultimate test will come if and when SpaceX goes public through an IPO or a Starlink spin-off. Then, the daily judgment of the global market will meet the Martian ambitions. For now, SpaceX remains one of the most fascinating financial stories of our time, a company where the financial statements are written not just in dollars, but in rocket exhaust and satellite beams, pointing the way to a future in the stars.